Good afternoon, Bob Dalton coming to you live from Allendale's trading floor here in McHenry, Illinois. It is Monday, June 6, 2011. We had some significant selling today in the grains as well as livestock, prompted primarily in the grains by the weather forecast drying off across the Midwest and the Corn Belt. And the anticipation of corn being roughly 95% planted here. We'll find out in about a half hour or so what the USDA is going to give us for planting progress numbers. We are expecting 95% of the corn to be in the ground. So we saw some selling take over off of weaker crude oil, stronger dollar helping the cause as well. Took out some stops and continued tumbling on down. We did end up 22 lower July corn today. 732 is where they settled up. Soybeans down 31 and a quarter in July, 1383 and a quarter is settlement price in that contract, and the wheat down 24 and a quarter in Chicago, 744 is where they settled. Another wheat market, keep an eye on July. Minneapolis wheat got up to about $11.20 a bushel today and finished roughly 60 cents off of that high. So some very volatile, significant moves in the Minneapolis contract. You're going to want to pull out a continuous chart to see where this market looks to be going next. There is a gap up at 1534 left back in February of 2008 for you bulls out there that are trying to pick a point as to where you believe this market may go next. 1534 is now in sight. So call us with any questions you have regarding that wheat contract. We'd be more than happy to share with you our ideas. Like I said a little while ago, the dollar firming up even now into the later electronic stages of the game, up 24 points on the day, 74.05. So we are now trading up above 74 points again in the dollar index. Crude oil down $1.56 right now at 98.66. So crude pulling back, the dollar strengthening up a little bit. Now, the corn being down the way it was, you would think, hey, well, that should be good for cattle in your feed markets. And the feeders did, in fact, strengthen up significantly here today. They were unable to hold on to that strength as the day went on. Feeder cattle down 15 cents at the close, 124.10 in August after trading up above 126 on the day. Live cattle down 177.5, 102.40 in the June contract. So we did see some strength early in the cattle. We're unable to hold on to it, and we did see selling as the day progressed and into the close. They were unable to regain the positive moves they saw earlier in the day. Hogs looking like they're trying to bottom. If you look at a chart in the July contract specifically, there's a significant price point, 86.50 I believe is the area that we're going to be finding support in that July contract if they are able to pull it back that far and test. We had July finish at 87.75, only down 10 cents. So the cattle pulling back pretty big, both feeders and fat contracts lower today. Hogs a little bit lower. Didn't really test support today. We'll see what happens tomorrow, but I'm starting to get excited about the possibility of higher prices in the hogs here in the near term. That's about going to wrap it up for us here today. This is a big week. We have reports coming out Thursday morning, 7:30 a.m., supply and demand, crop production numbers. This afternoon we have crop progress. So this is going to be a very busy week. Call us with any of your questions. Phone number here, 800-262-7538, or visit us on the web, www.allendale-inc.com. Again, my name is Bob Dalton, and thank you very much for tuning in this week.